Ladies and gentlemen, good evening and welcome to Anlon Healthcare Limited Q2 and H1FY26 conference call hosted by Concall Partners. As a reminder, all the participants' line will be in listen mode only, and there will be an opportunity for you to ask the questions after the presentation concludes. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference may contain forward-looking statements about the company, which are based upon the beliefs, opinion, and expectation of the company as of the date of the call. This statement do not guarantee the future performance of the company, and it may involve risk and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Parth from Concall Partner. Thank you, and over to you, Parth.
Thanks, Krisha. Good evening, ladies and gentlemen. Parth here from Concall Partners. We represent the investor relations for Anlon Healthcare Limited. On behalf of Concall Partners, I warmly welcome you all to Q2 and H1FY26 earnings call of Anlon Healthcare Limited. The company is represented by Mr. Puneet Kumar Rasadia, who is the Chairman and Managing Director at Anlon Healthcare Limited. I would now like to hand over the call to Mr. Puneet Ji for his opening remarks. Thank you, and over to you, Puneet Ji.
Yeah. Good afternoon, everyone, and warm welcome to Anlon Healthcare's Q2 and H1FY25-26 earnings conference call. For Q2 FY26, total income stood at rupees 52.323 crore, which is over 2x of the 24.21 crore, which was recorded in Q2 FY25. It's representing 116% year-on-year growth. EBITDA for the quarter grew from 7.57 crore to 13.77 crore, delivering an 82% increase. Most importantly, PAT increased from 2.59 crore to 9.32 crores, reflecting nearly 4x jump on year-on-year basis, driven by strong operating leverage and an improved business mix. For the first half of FY26, total income rose from 62.11 crore to 85.53 crore, 38% year-on-year increase. EBITDA grew 38% from 14.55 crore to 20.01 crore, while PAT doubled from 2x from 6.36 crore to 12.86 crore on year-on-year basis, supported by consistent contribution from high-value intermediate and APIs. From a strategic standpoint, H1 FY26 marks an important phase in Anlon's journey. We strengthen our global compliances footprint with the ANVISA approval for our manufacturing facility with zero observation, reflecting our adherence to global GMP standards. We now have 21 DMF files across major regulated markets, with upcoming submission for ketoprofen in the USA and dexketoprofen trometamol in European countries, positioning us for deeper penetration into regulated market in the coming year. Operationally, our Rajkot manufacturing facility continues to perform efficiently, operating at 84% capacity utilization, supported by strong quality system, modern reactor infrastructure, and for in-house R&D laboratories. The R&D pipeline continues to strengthen with 65 commercial products, 28 in pilot scale product, and 49 molecules under lab development, providing long-term visibility for the scale and portfolio diversification. The company is also progressing well on the CDMO opportunity with 3 molecules under development for 2 global giant innovator companies currently in the validation stage. Commercialization is scheduled for Q3 FY27, making Anlon's entry into the high-value global CDMO space. Looking ahead, our strategic priorities remain centered on scaling into global markets, accelerating DMF-driven expansion, strengthening our portfolio in high-margin APIs, and executing our 700 metric ton year greenfield expansion, which will take our total capacity to 1100 metric ton a year. This expansion will support our ambition to achieve 30% plus revenue CAGR over the next 3 years, alongside a structurally improving margin profile. We contribute to leverage China plus one tailwinds, rising global demand for the high purity intermediates, and growing opportunity in nutraceutical, personal care, and animal care with the high compliance platform, strong order visibility, and sharp operational focus. Anlon Healthcare is well positioned, sustained long-term growth. Now we can open the floor for question and answer. So Parth, you can start with it.
Participants are requested to raise their hands for the question. Also, one can request the question in the Q&A box. We have Mr. Paras Cheda. Sir, you may now unmute and introduce yourself.
Yeah, hello. Thank you for this opportunity. And sir, congratulations for the very strong set of results. I just got a couple of queries, sir. I mean, if you can help, throw light on these. So, sir, first of all, when is this 700 metric tons plant metric ton plant coming up online in terms of the deadline?
See, we are planning for the expansion within our facility, and we have spare own land also. But we are just exploring the option because considering the current business opportunity and the order books position for next 2-3 years from our existing and regulatory customer, that if we are going for the expansion, then it will take around 1.5 years. So company is already trying to explore the opportunity for the ready-made unit also, so we can start the immediate production in the different site for our backward integrated non-regulatory KSM and other raw materials.
No, sir. So sorry, sir. I have not understood. So 700 metric ton plant. So has that been decided? Are we taking over some plant? Or
it is.
Yeah, please go ahead, sir.
Can you pardon? Your voice was broken.
Okay, no, sir. What I was trying to say, ये 700 metric ton का plant जो we are trying to set up, that will be a greenfield facility, right? So when is it coming?
Yes, that will be the greenfield facility.
Right. So when is it coming up in terms of commencement timeline?
I think we are trying to do it as soon as possible, most probably within this quarter only, and it will take around 16 to 18 months to get the production and trial run, all this activity completion.
Achha, okay. So the plant commissioning will happen by, let's say, end of December this year. But
commissioning will start immediately within this quarter, and it will take around 16 to 18 months for the completion.
Achha, for the completion. Okay, understood.
Yes.
Understood, sir. And sir, so the current 400 metric ton plant, what would be the peak revenue on that, sir?
I think this year we are expecting somewhere around 170 to 180 CR from the existing facility at the peak.
And this will be the peak?
Yeah. There may be a little bit possibility of 10 to 15%.
Okay. Right. So for your further growth, then you will need this 700 metric ton plant to come in sort of.
Exactly. Yeah, either we need to go for the immediate expansion or immediate inorganic acquisition, so we can comply our whatever the order or opportunity we are having in hand.
Right. So the capacity otherwise can become an issue. And sir, on the 700 metric ton, as and when it comes in, what will be the peak revenue at, let's say, and peak revenue, what would it be at 80% utilization?
Considering, practically 100% utilization is not possible in pharma, so we are considering 80 to 85% utilization after 1100 metric ton total capacity. At that time, we are expecting the peak revenue somewhere around 360 to 400 CR.
So 360 to 400, that is inclusive of the current 400 also?
Yeah.
So incremental, broadly, you are saying about 200 to 220 crores odd.
Yes. Yes.
Understood, sir. Understood.
Would request Mr. Parasji to please join back the queue since we have a limited time from the management.
Okay, fine. I'll come back.
Just a quick reminder to everyone, if you have questions, please raise your hand using the reaction tab. Next, we have Mr. Bhavesh Patel. Sir, you may unmute and introduce yourself.
Hi, good afternoon. First of all, it's great to hear from you and congratulations on great set of numbers. Really excited about, the company and the future. So my first question is, the greenfield facility that we are talking about, is it like a completely new location? Because especially in pharma, having a second location is great for de-risking. And the second question is about expansion related capex. Would we require any external money? And then you briefly touched upon inorganic growth by acquisition. So any ideas that you have? Once again, thank you for the opportunity and really excited about the company.
Yeah. See, first question, Gaji, we are planning for the expansion with our adjoining land. We are having the spare open land over there, and we have one additional land also. So we are not planning for any fresh greenfield expansion where we need to get all the statutory approvals again. But any which ways, if we are going for the even with the additional then also we have to get all the EC compliance and everything. But it is little bit smoother than the new greenfield project.
Understood.
Yeah, and your second question regarding capex and all those things. So in DRHP, when we got the IPO proceed, we have reserved the 31 CR for the new capex expansion. So that fund we are having with us, and right now we don't need to get any debt or bank loan for the further new expansion, for the specifically capex.
Sure. And the last one about the inorganic.
Yeah, regarding inorganic acquisition, can you pardon the question?
Yeah, the question is, are you looking at, some synergy in terms of acquiring some some company which makes sense for the kind of work we are doing?
Yeah, we are already looking for that, and we have identified some facilities also. So what we can do is, because all these products which have been registered to regulated market, that is already matured, and we are having the big visibility for our next year customer requirement for our products. So our capacity is very less. If we will not supply to our customer, then maybe there is a possibility that they will start to identify the new supplier. So we don't want to lose the business opportunity. That's why we are trying for looking the opportunity for inorganic acquisition also along with the expansion.
Sure. And Puneet bhai, just a request. I know through company secretary we might request possibility of coming and meeting you and seeing the plant. Anytime,
Bhavesh bhai, not an issue.
Please.
You just let me know 2-3 days prior to your visit, so I'll arrange your visit comfortable.
Wonderful. Thank you very much.
Just a quick reminder to everyone, if you have questions, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Agastya Dave. Sir, you may unmute and introduce yourself.
Yeah, hi, this is Agastya Dave from CEO Capital. Sir, actually my questions are follow-up on what the first participant asked. आपने कहा कि जो नया 700 टन्स का प्लांट है वो दिसंबर में कमीशन हो जाएगा या दिसंबर में उसका कंस्ट्रक्शन
will start the commissioning. It will take 16 to 18 months for the completion.
So that would mean the construction is going to start in December, right? Sir?
Yes, exactly.
Yeah, commissioning would mean कि सब खत्म हो गया सर.
Basically, what happen if we are going with the existing adjoining land, then all these utility part and other apart from the production area, their capacity we already have with our own existing plant. So correct. Construction will be started and parallelly commissioning of the further equipments apart from the production. That will be, I think, installed maybe after 6 to 8 months.
Correct. Sir, can you give some idea as to the revenues in Q2 which have come from Loxoprofen, and if you have the breakup between how much revenue came from intermediates and how much came from APIs?
Yeah, just hold. See, from APIs we are having in H1 around 70%, and for intermediate 27.2%.
Understood. And this is for H1, sir, you said?
Agastya, sorry, I'm just in the error. 27.21 from the API, 70 from the intermediate.
This is for H1, sir?
H1, FY26.
Okay. And sir, जो आपको पिछले साल का जो पोर्टफोलियो था, मार्च एंडिंग पोर्टफोलियो जो था प्रोडक्ट का, उसमें कितना ग्रोथ आया और कितना ग्रोथ आपका नए मॉलिक्यूल से आया है?
See, basically what happened, last year we were mainly focusing on the domestic customer for our APIs and intermediate.
Yes, sir, I remember this.
So in that what happened, basically our product registration and everything was at the approval stage. Now we got it that within this year and we got the advantage on that. So this year domestic API is having the lesser, intermediate is more, and we are trying to manufacture and supply, having the order from our overseas customer for N-1 specifically for API. So our intermediate is increased and API contribution is decreased.
Okay. So इसकी वजह से margin में कितना impact पड़ता है जब
margin would be almost similar, but we are even getting the better margin in the export N-1 KSM. Okay. Because domestic market is highly price sensitive, so you have to always do the bloodbath with the domestic traders and importers.
Final question, sir. For this quarter, how much was the exports?
This Q2 or Q3?
Q2, sir. जो आपने report किया है अभी.
Just look.
Sir, you can probably post it in a presentation later.
Yeah, I'll just send you in the chat box.
Perfect, sir. And sorry, sir, last question. What would be the capex for this year?
Capex we are planning for at least 32 CR for the expansion, and if we are going for some inorganic acquisition, then it would be around 50 to 55 CR.
Separately or total?
Separately.
Okay, so 32 plus 55.
Then 32 will come in the next financial year because all these
that I understand
will not come immediately.
Correct. But the acquisition you said that size would be around 55 crores.
Yeah, 50 to 55 CR.
50 and वो tonnage कितना रहेगा sir roughly?
That will be more than total 1100 metric ton. So that is
understood.
It will be more than that.
Understood.
And we are trying to acquire this facility with the strategic point of view because we are de-risking the risk for the single unit separated. So if something happen in future, then there will be no issues.
To be honest, sir, the first participant was right. You will have to acquire it because otherwise capacity का constraint बहुत जल्दी आने वाला है आपको.
Exactly. We are already facing because we are having the huge order in hands and we are not supplying the material to customer even whatever quantity they require.
Right, sir. Sir, thank you very much, sir, and all the best, sir. Great performance. All the best for the acquisition also, sir. Thank you.
Thank you.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Rudraksh Raheja. Sir, you may unmute and introduce yourself.
Yeah, thank you for the opportunity, sir. I'm Rudraksh Raheja representing iThought PMS. Sir, first question is that you are adding 700 tons capacity and the revenue guidance that you gave is double of what we can do at this capacity. But ideally, we are almost tripling our capacity in volumes. So why this discrepancy?
Because we are expecting around 16 to 18 months for the completion of the expansion, and we'll hardly get 6 to 7 months in financial year. So that's why that revenue what we are proposing you, that is considering 6-7 months revenue after expansion.
No, I think the question was at the peak when you are fully utilizing 1100 tons capacity, how much revenues we can do at that scale?
So 360 to 400 CR, it is doubling of that. But see, normally what happened, when we are going for the further expansion or inorganic acquisition, our existing site is registered in all the regulatory market. So if we need to produce more quantity, then we have to pull out some of the intermediate which is not coming in the regulatory part. Otherwise, we have to register the new sites also. That will again take the time. So we are considering our backward integrated raw material or KSM, which is not required regulatory registration, that we are planning to manufacture over there and will increase the capacity in our existing plant. So it is not like that both capacity will going simultaneously and both will produce the APIs.
Understood, sir.
So are you clear, or can I further explain to you that how exactly it will work?
Yeah, please go ahead, sir.
See, actually what happened, I'll give you an example. Suppose if we are manufacturing ketoprofen, so ketoprofen manufacturing process involves 7 to 8 chemical steps. Now when we have registered our product in Europe, at that time as per the mandatory rule, we have to produce at least 2 stages in our plant, which is regulatory registered site for the UDQM Europe. Now, right now we are manufacturing 5 to 6 steps in existing plant. If I need to expand my capacity, then I need to pull out 2-3 steps to the outside, and we have to focus 2 steps production capacity enhancement in existing site. So when we are taking out the N-3 or N-4 stage out of the existing facility, then revenue contribution will not as good as like the ketoprofen. So we are enhancing the capacity for existing plant, but the product which is getting manufactured in a new expansion or inorganic acquisition capacity, their cost of selling would be lower than the API price what we are selling. Considering that the revenue bifurcation, what we are expecting at least for 1 year would be like that if as we are already adding the new high value products, so after 2 years or 3 years, we can reach to maybe around 500 to 600 CR for our further new 2-3 products, which is already at the CDMO stage.
Okay, sir. And sir, will this...
you are not clear, maybe you can reach to me. Parth will give my number or my email address to you, so I'll better explain to you that personally.
Yes, sir. Definitely, we can take this one offline.
Yeah.
Yeah. So when this 1100 ton kicks in, is that sufficient for that CDMO project that we are doing with innovator companies?
At least right now we are considering that for maybe at least next 2 years it is enough. But if further expansion required, then we are ready for that. Because what is the visibility right now we are having from customer for next 2-3 years plan, so that 1100 metric ton would be sufficient for us.
Sir, right now we have expanded our EBITDA margin substantially over the last 2-3 years. So what would be the sustainable number going forward?
For both the expanded and current facility?
Yes, sir.
I think we can maintain the same EBITDA with the top line of 360 to 400 CR percentage wise. Or maybe we can improve also, because we are having 2-3 high value molecule which is almost around $850 a kg and which is required in metric ton load. So in which will get some better profitability also.
And sir, when are we expecting those launches, the high value molecules?
Third quarter of next year. Validation is already completed. 3 months stability data is pending from customer end. So all these procedure and registration will take at least 6 months. So we are expecting by third quarter of next year.
Understood, sir. Sir, what would be the share in the revenue mix for our top 3 molecules? Loxoprofen, ketoprofen and dexketoprofen?
This year or projected?
I think both figures would help, sir, if you could.
Top 3 products we have actually not separated out. We have top 10 products contribution and top 5 products contribution. So if you require, then I'll work it out for that. But for H1FY26, our top 5 product contribution is somewhere around 78%.
Got it, sir. Sir, I'm trying to understand that our EBITDA margins for an API company are pretty much very high, and if I have looked at the export profile correctly also, then we have less than 5% of our revenues coming from exports. So selling to India with these API, so could you help me understand how we are generating these kind of margins?
See, we are having two models for the export. Firstly, with the major global companies like in Europe or Brazil, Japan, we are doing the direct export to them. Or for while semi-reg or ROW market, we are having set of our agents in India who is doing merchant export through us, but we are not directly, because that agents and payment security is involved. So we are not directly dealing with that for Mexico, Colombia and all those countries, even for Lebanon, Syria, Turkey. So that's why direct export figure is 5%, but this year I think we'll close with somewhere around 30% export in this financial year.
And sir, what would be the margin differential between domestic and export markets?
See, basically how we are working as per considering the thumb rule. When we are supplying any product to any domestic customer, we are considering in mind that our raw material cost should not be more than 65% of our selling price. When we are going for the export, at that time we are keeping our raw material cost maximum 50%. So there is a huge gap of 15% for the EBITDA, means raw material cost and selling price, because in reg market we have to obtain the audit every year, and all this audit cost or any observation we have to do some modification. That cost is considered and we are keeping that margin. So there is a difference between 15 to 17% between domestic and export.
Got it, sir. And sir, going forward, do we intend to increase this export share or
next year? See, considering the current order and all this registration, approval, all those things, we are confident to make at least 60% of export revenue for next financial year.
Got it, sir. And sir, the expansion that we have talked about of 700 tons, how is that capacity? Is it like a drug specific capacity?
No, it is a multi-purpose plant. It will be the multi-purpose plant.
Sir, I lost your voice there. Could you?
Yeah, it will be the multi-purpose plant. So it is not product specific, but we can go for the multiple products as and when as per the campaign designing.
Got it, sir. And sir, on that 700 tons, are we expanding for our existing molecules, or are we getting any
existing molecules only?
Okay, existing molecules only.
Yeah, so that is the confirmed order we are having in hand. For that only we are right now expanding.
Got it, sir. Sir, could you help us understand your product selection criteria? Like you talked about 2 high value molecules also and other launches also. So how do we decide which new molecule we start making and researching and adding in our portfolio? Is it growth rate based, competition based, or any specific chemistries we are
yes, exactly. See, we are very good in some kind of specific methylation and Friedel-Crafts chemistry. The molecule, the Profen series painkiller, is highly cost sensitive on the chemistry part with the methylation, and I think we are having the best process and chemistry part compared to China, and we are much competitive than the Chinese manufacturer. And one more thing we are considering, that no raw material should be the China dependent, because nowadays we are also feeling the China plus one policy from our customer. So they are upfrontly asking us if is there any raw material is imported from China or not. So considering that, we are selecting some molecules in which there should not be any Chinese dependency, along with there is a possibility to become the world largest in specific molecule. So that is what we are following.
Got it, sir. So currently how much KSMs we are procuring from China?
We are not doing any KSM directly from China. Mostly the solvent and reagent which is getting imported, that is what we are buying from the domestic importer. Otherwise, none of our KSM is from China. Generally, what happens when we are selecting any molecule, we are developing the process from basic scratch. even though we are not manufacturing from scratch, but to be the competitive or to get the upper ends always and reduce the risk of the price war, we always be ready with all this development from the scratch, and this process optimization and everything is going regularly in our R&D. So cost optimization, process optimization, even effluent optimization, everything is going on, and we are not having any Chinese dependency on any raw material. If is there any Chinese dependency, then we are trying to develop the process and we'll give some manufacturer for specifically manufacturing for us.
Sir, so from what I'm getting is that you try to be backward integrated from day one.
Exactly. We are fully backward integrated.
Would that be okay? Understood, sir. I'll come back in the queue for if I have more questions. Thank you for your detailed answers, sir.
Just a quick reminder to everyone, if you have questions, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Darshil Zaveri. Sir, you may unmute and introduce yourself.
Hello. Good evening, sir. Thank you so much for clearing the information. Firstly, congratulations on a great set of results, sir. Sir, मेरा एक question था कि we are saying 30% growth for next 3 years in our PPT, but the current capacity we are at around 85% utilization. So, and the 700 ton capacity we are saying 16 to 18 months. So effectively it will come in FY28 only. So the next year, what will be our revenue target? This year we are, saying we have given our revenue target for 180 to 200 crores. But next year, what do we see? Because we'll be completely utilizing our capacity, and the new plant will also take some time to come. So what is your thought process, sir?
Yeah, Darshil, as I mentioned, that's why we are simultaneously explore the inorganic acquisition for our backward integrated raw materials, so that we can increase our API or finished product capacity in existing plant. So that exploration is already going on, and maybe within this month or mostly by mid of next month we'll come with some outcome and finalization on the acquisition.
Okay. So it is in that advanced stage.
We don't want to lose any business opportunity as of now. So expansion and acquisition both can go the parallel.
Okay. That understood. So sir, once the expansion is also done and we have an acquisition, then sir, what will be our game plan? So acquisition will also be backward integrated, and the expansion also you are saying is more towards the backward integration of our part. So how will it, be right? Like how will we maximize our thing? Because that also we are seeing, I think till I remember 1100 megatons we are going for out there also mostly, and in the new capacity also it is a 700. So we'll have 1800 tons of backward integration and 400 megatons of forward integration. Can you help us out? Like just
no, Darshil, it's not like that. Actually, if we'll go for the inorganic acquisition, in that case, whatever the expansion we are planning for with our existing plant, that would be considering our finished product and API facility. So backward integrated raw material capacity from the outside, and we'll make the in-house manufacturing for all this API for regulatory market. So we don't need to do the site registration and approval again, which will take around 2 to 3 years.
Okay. If inorganic opportunity.
So we get the expansion means enhancement in our API capacity along with the intermediate capacity both.
Okay, will be in API intermediate. Okay. So sir, just wanted to know like what will be our picture looking like in FY28 and FY27. So FY28 we are saying if we have inorganic opportunity that we do, then we will what will be our capacities, and if not, then in FY27 how does it look? Because there are two pathways that we are looking for, right? One is inorganic and one is expansion. So could you just help us out, sir, कि अपना कैसा किधर कैसा रहेगा? मतलब इसमें कंफ्यूजन क्या होता है कि एक तरफ से we want to model कि ओके 700 मेगाटन का अपन मल्टीपर्पज प्लांट बैकवर्ड इंटीग्रेशन के लिए करेंगे, एक में पता चलता है कि शायद से इनऑर्गेनिक का अपना होने वाला है, तो वो थोड़ा कंफ्यूजन हो रहा है सर. So you could just help us out with that, like what is the exact plan? If we are going for inorganic, which we say in next 2 months we can complete. So if organic doesn't happen in the next 2 months, we'll go for capex, or how would it be, sir? Just you can help us out with that.
If we'll go for the inorganic acquisition, then we'll outrightly buy if we'll make the 100% subsidiary for to that company with the Anlon. Or if we'll successfully complete that as per our requirement or inorganic acquisition, still we'll go with the expansion, but in that expansion we'll focus more on the API production. However, backward integrated product will be already there, but that will be the product from where we have to do the regulatory registration. So generally, as per the regulation N-2 or N-3 from the regulated approval site, in remaining KSM we can do it outside. So that strategy we are planning. So next year at least we will not lose any business what we are trying from last 2-3 years from existing site, and once our new expansion will be ready, then we'll start to offer the further molecule which is already going in pipeline, and we are expecting it will be commercialized by 2028.
Okay. Fair enough, sir. Understood that. So, sir, in FY27, what can be our revenue? What do you estimate, sir?
Next year, honestly, we are expecting minimum 360 to 400 CR after inorganic acquisition.
Okay. After inorganic acquisition, sir. And sir, margins with this high revenue, will we get some operating leverage and margins can be higher because
we feel that margin would be more or less similar, because see, once we'll expand the capacity, then we need to bring so many professionals, and so I think operating cost would be little bit higher than compared to what we are having right now.
Okay. Fair enough.
But we'll try to keep the almost similar margin or slightly better than that.
Okay, sir. And just last question from my end. So from what I understand, FY27 our plan is correct. Now FY28 we'll be firing on all 3 cylinders. We'll have our existing plant, we'll have an inorganic opportunity, and the backward and the new expansion of finished goods. So at that time, sir, what will be our potential for us, sir? In terms of tonnage and revenue, sir, or either or whatever you're comfortable.
The tonnage would be somewhere we are putting almost the same 600 to 700 metric ton capacity. So our total capacity would be around 18 to 1900.
Okay. So at that capacity, what would be our revenue potential, sir?
See, now it is a little bit difficult for me to right now comment on that, because the product what we are having in right now for the 27 or 28, there are mixture of product, but I can tell you the average what we are expecting right now would be after all 3 commencement and everything would be somewhere between 520 to 540 CR.
Okay, fair enough, sir.
But it is not the peak value, but that may be the more or less 550 CR somewhere.
No, I understand. So that we can do more, precise once our acquisition and everything comes in. But this is a rough range, so that I understand. Okay, fair enough. And just you can know our order book, sir. What is our current order book that we have?
For next year, we are already having the order of somewhere around you can say 380 CR for the confirmed for our registered product.
For a full revenue, we have ordered only that much. So that is a great sign, sir.
Yes.
Oh, okay. This is mainly export, 60% export, right?
Around majorly 50% export.
Oh, okay, 50% export, sir.
Would request Darshil sir to please join back the queue since we have limited time from the management.
Yeah. Thank you.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can request their question in the question box. And since we have very less time from the management right now, we'd request participants to stick to 2 questions at a time. Next, we have Nitin sir. Sir, you may please unmute and introduce yourself.
Hello, am I audible? Yeah, hi Puneet bhai. Just one question only. I want to understand in terms of the inorganic expansion, how far you are in negotiation? Has the particular facility identified, or you're still in between finalizing between two
No,
to three or more?
actually, PV is already completed. Financial due diligence is already done. Legal due diligence is going on. So mostly within this week, we'll get the final report from the legal team. Chartered engineers due diligence is already done, and our in-house team has already evaluated the product what we are planning to manufacture there. So more or less from our end, it is now almost to finalize the SPAs, share purchase agreement.
And this facility would be having existing certifications, so there is no lag between you running
Yeah, the facility is already a running plant, so there is no issue in terms of statutory or regulatory approval. That is what legal due diligence is going on. So, and both the facilities are known to us, so we are familiar with them, and we know their capacity, the size of equipment, and most of the details about their statutory and regulatory approvals.
Understood. That's it. That's all I have. All the very best. Thank you.
Just a quick reminder to all the participants, if you have question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Bhavesh Patel. Sir, you may unmute and ask your question.
Thank you for the opportunity. My question is around higher inventory days, and that's leading to working capital days of almost 290 and all. So just want to understand, is it kind of an industry practice or something that you are working on? And the last question is, with that higher working capital day, are we looking at, reducing our debt equity from a FY27-28 perspective? And for a real long-term investor perspective, what's our dividend policy?
See, first thing is that in pharma right now, this global market or customer mindset is like that. If I'm considering the receipt of the raw material in the factory, after all this performance trial, quality testing, GRN generation, production, then dispatch, and transit time to the payment receipt, that days is almost 170 to 180 days, because general payment terms is 90 days nowadays in pharma, but generally all the A grade or all these companies are making the payment between 120 to 130 days. So that is the standard practice nowadays in pharma. Even for the export market also, the standard date of payment is 90 days from the date of the BL or airway bill. But generally, customer are doing the analysis and all those things. After the QC approval, they are considering the 90 days. So it is more or less almost 120 to 125 days. Considering all the production time and all these things, so it is 160 to 170 days cycle for manufacturing, and receipt of the means working capital cycle.
Sure. So what's the long-term plan for debt equity and then longer-term investor benefits like dividend?
Right now we are focusing for the making the capex and all this profit in expansion and all this investment, further improvement or development of products. So I think for at least next 1 year or 1.5 year, means FY28, the company is still not decided for any dividend or anything.
Sure. Any target debt equity ratio that you have in mind?
See, basically, I think right now we are not having any, it is more or less 5-year term loan with that. So otherwise the debt equity ratio is not, maybe somewhere around 0.6 or something.
Okay. Understood. And we will have it less than 1 for sure.
Yeah, right now we are also having 0.6 or 0.63 something.
Sure. Okay. Great, and I'm really liking what I'm hearing. So all the best, Puneet bhai, and look forward to meeting you when the opportunity is there.
Sure, boys.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can ask the question in the Q&A box. Next, we have Mr. Paras. Sir, you may unmute and ask your question.
Yes, sir. Sir, just Couple quick questions. Your EBITDA margin going forward, you're saying blended EBITDA margin would be in the region of about 25 to 27%?
Yes.
That's what on an annual basis.
Yeah, it's on annual basis.
Right. Secondly, sir, we basically, majority or bulk of our business is with almost top 5 customers only. So, is there a concentration risk currently, and therefore, what are the steps that we are taking to de-risk this?
Yeah. See, I'll tell you why it is showing the top 5 customer contribution. See, basically, normally we are in the API business in which there are so many entry barriers, registration, approval process. So it's not like a FMCG or any formulation finished dosage company that we are having n number of customers. So the products I'll tell you like the dexkitoprofen, which is innovated by the Minarini Italian company. Now Minarini is having their tablet for the dexkitoprofen, which is having the global 60%, around 60% market share with them. And we are the only Indian manufacturer, or maybe out of their global supply chain, we are the only manufacturer who is supplying them the N-1, the backward integration of the dexkitoprofen. So that volume is so big that indirectly we are catering at least 50 to 60% of the global market share. So that's why the top 5 customer is showing the major our selling ratio. In domestic market, we are working with the 2 channels. If is there any corporate requirement, then we are supplying directly. Otherwise, we are having our dealer distributor network in domestic in North, Mumbai and Chennai. So that we are supplying to them, and then they will do the stock and sale. So in our books, it will come as a single customer. But I think in India, we are catering more than 125 customers.
Understood, sir. And sir, just last bit, if I can slip in, FY24 saw a significant drop from FY23 revenue, and then again it picked back up. So, variation हुआ है, what is that? 22.
See, actually, what happened?
130.
Yeah, I got your question. Parasbhai, I got your question. Actually, what happened? In 2022, we have filed the DMF in Brazil. So before 2022, Brazilian Drug Authority, ANVISA, was never doing the physical audit for any API manufacturer unless and until it is critical. So that new guideline came in the picture, and when we have filed, then at that time, we have been informed for the physical audit. So our customer EMS, who is number 2 pharma company in Brazil, they have initiated their audit with their own team in India, and they have raised some observation in our production and storage area for modification. For us, we have to take the mandatory shutdown of the 4 months. So that stops our sales and it reflects in the FY24 results. So that's why the sales was down. Otherwise, FY23 was somewhere around 113 CR, and again FY25 was 120 CR.
Right, sir. Understood, sir. Fine. Thank you, sir.
Just a quick reminder for everyone, if you have question, please raise your hand using the reaction tab. Also, one can raise their question in the Q&A box. Next, we have Mr. Rudraksh. Sir, you may unmute and ask your question.
Thanks again for the opportunity, sir. Sir, we have seen some decline in API share in revenue mix for H1 FY26. It's 27%, and for FY25 it was much higher. So is seasonality aspect involved here?
One aspect is seasonality. One aspect is like that. Basically, our key hero product was this H1 was ketoprofen and dexkitoprofen. So dexkitoprofen is the forward integration of the ketoprofen. So we have the set of the customer in India like Emcure, Saurav Chemicals, Metrochem, who are buying the N-1 of dexkitoprofen from us, which is the backward integration of the dexkitoprofen, but that molecule is the forward integration of the ketoprofen. So any which ways we have to produce the API ketoprofen, then we have to do the chemical process, then it will supply to the customer. So it will fall in the category of intermediate, but we have to any which ways produce the API from that further forward integrated intermediate. That's why that supplied is showing the intermediate contribution higher than compared to last year.
So, okay. So what would be the margin differential between API segment and intermediate segment?
See, APIs and intermediate, we are not having that much big margin, but more or less we are having the similar margin. But in API, you can say like that 1 or 2% higher EBITDA compared to the intermediates.
Understood, sir. Understood. Sir, we talked something along the lines of price erosion in API market and how we try to have a grip on that. So, in the last year, for our set of molecules that we supply, what's the pricing trend and how do you foresee it going for next, let's say, 2 to 3 more quarters?
See, compared to last year, this year our API or intermediate prices are reduced by 10 to 15%. Because the price war from the China, or maybe they are having the huge spare quantity and they want to liquidate due to the pressure in US for the tariff and all those things. But I think now the market is stable, and considering last 3-4 months or considering our next year's the confirmed contract, we are not having any price pressure as of now from our customer. Because we are in niche segment and the product what we are manufacturing, in which hardly there is only one Indian manufacturer. Otherwise, we are not having any competition from the domestic manufacturer.
Got it, sir. Got it. And sir, for this inorganic expansion that we have talked about, how much debt we will need on our books?
I think we have the right now cash with us from the IPO proceed and reserve surplus also. So we are not planning for any debt as of now. It will buy it from our own fund.
Okay. And sir, can we fund our own 700 ton expansion also with internal accruals only?
Yeah. Because for that we don't need all those money in the one tranche. So we'll do it from our regular cash flow, and we'll clear it without any further debt. Basically, we want to keep the company down the line debt free.
Yes, sir. And what would be the expected timeline?
Mr. Rudraksh, sir, please join the queue since we have a limited time from the management.
I think last answer I will give you. We are planning that by last quarter of next calendar year, means third quarter of next financial, we will be the debt free.
Understood.
Even though right now the only debt is around 4.5 CR of the term loan, otherwise there is no any further outsider debt.
Yes, got it, sir.
Just a quick reminder to everyone, if you have a question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. Next, we have Mr. Paras. Sir, you may unmute and ask your question.
Yeah, thank you again for this opportunity, sir. Sir, this acquisition that we've talked about, and which would be the capacity would be greater than 1100 metric tons per annum. What kind of peak revenue can this capacity generate, sir?
From the total or the separate inorganic acquisition?
From the inorganic acquisition entity.
That would be, peak revenue would be maximum 300 CR from the current product what we have planned over there. If we plan with the new intermediates or our backward integrated high value raw materials, then it can be increased. But right now from our planned advanced intermediate what we are planning, that would be 300 CR.
Right, sir. And when all the three facilities are, sort of online, we acquired the expanded and the current, what kind of peak revenue can be done on that, sir, in FY28 or beyond? But
I think peak revenue is very difficult for me to as of now comment on that.
But broad brush range, I mean, it could.
But I think average for FY27-28 to the projects what we are having in hand or customer commitment after commercialization of the project, we can say up to 500 to 550 CR averagely we can reach with all these three facilities.
Right. But now if you want to go beyond that with the same capacity possible or no?
But then we have to play in our product range also. We have to, I think, reduce the low value product which is contributing lower in our revenue, and we have to focus more on the high value product. Right. Instead of going further for acquisition or expansion, but that can be discussed, I think, once our facility will be full for our existing product.
Right, sir. And sir, just last query mine. Basically, what safeguards do we, have in place to ensure compliance during global audits? Meaning to say, we have this facility currently, you'll acquire some and you'll expand also. I mean, ultimately the revenue will be possible, of course, when you have a full-time uptime, what we saw otherwise last year or in FY24. So, how do we ensure, that we have a 100% sort of uptime?
Yeah, Parasbhai, that is why we are not trying to manufacture our own existing product which is registered in regulatory market in our new acquired facility. We want to manufacture our backward integrated raw material which is not falling in the criteria for the regulatory approval. That facility and product need to be approved by us only. And we have to just submit the report to our DMF. So that will not be the issue for the regulatory compliances in terms of supply the intermediate to our own existing facility.
Right. And for the acquired entity?
For the acquired entity only. For new facility, for in our in-house, what we are doing, that will be having the same regulatory requirement. So that we need to approve. Actually, we need to just add the additional manufacturing capacity within our premises. So that is much faster than compared to registering the new facility.
Right. Typically, how often does this audit take place? I mean, broadly.
Generally, what happens if you are supplying any of your API to any regulatory customer? In this case, they are manufacturing finished dosage and they have to submit the report to their local local FDA. If you are supplying to Europe to any customer API, then they have to submit their report of auditing our facility to EDQM, which is regulatory agency. Now it is not like any fixed time from EDQM to audit that. If customer has audited and EDQM is satisfied, then authority is not coming. But if is there any challenges or something like that, then EDQM will come directly to audit us also. So mostly you can say maybe once in a 2-year audit will be triggered. But customer audit every year.
Achha, customer will do it every year.
Every year.
Understood, sir. I mean, if there is a possibility, any expected timeline for US and EU DMF approvals?
See, actually what happened, we have not applied for the US purposefully because we are supplying one of our product to Sanofi, Germany. And Sanofi is going to trigger US FDA audit in June 26. So once they will trigger, then all the cost, which is a very huge burden to all the manufacturers, so that cost will be absorbed by the Sanofi and will get the US FDA. So DMF, everything is ready, so we are just waiting to trigger the audit from the Sanofi.
Right. And for EU, sir?
EU, we already applied the EDQM, we already got the confirmation from them. CEP is already applied. Now EDQM come to any time because all our customers regularly audited us. In this year also, we have been audited by 3 to 4 customers.
Right. So by the end of this year, we'll be most likely EU compliant also.
EU is already there.
Achha, it's already there. Okay.
Yeah.
Okay. Thank you, sir. Okay. Sir, I might just connect, with you later on,
Yeah, no issue.
I'll connect with Parth and connect with you.
Yeah, sure.
Thank you. Thank you, sir.
Thank you.
Just a quick reminder to everyone, if you have question, please raise your hand using the reaction tab. Also, one can request the question in the Q&A box. We believe there are no further questions from anyone. We will now hand over the call to Mr. Parth for the Q&A box.
So Puneetji, there are a few questions from the Q&A.
I'll just typing the reply.
Okay, you might as well answer because that will be reflecting in the transcript.
Okay. Rajaram Singh is having the question, what is the status of 2 new APIs to be launched in November? What is the ramp-up time and revenue potential? What is the timeline for capacity addition and revenue potential? See that 2 products, artemether and lumefantrine, we already started and we have supplied some of the quantity within this month also. So, but it will give us the revenue boost maybe after in last quarter or maybe from the first quarter of FY26. And what is the timeline for capacity addition? I think that we already discussed that additional capacity expansion and inorganic acquisition what we are doing. So that question must be maybe answered. So if is there any further query, Raja Ramji, then you can ask me.
There are a couple of more questions which is
please provide the CDMO view, opportunity and company strategy for growth in sector. See, we are already working with the two innovator companies. One is in Israel and one is in Europe. So we are having three maybe their NC molecules with us. It is already developed and scaled up. Pilot validation is already going on. So maybe within this quarter it will be completed. Then we'll submit the validation quantity to customers. So we are expecting the commercialization of that CDMO projects by third quarter of next financial year. Then what is the strategy of the company behind entering into new sectors like industrial and fine chemicals? What will be the synergies with existing product? What is the view of the management on entering? See, that is means what we are planning for industrial and fine chemicals. There are so many raw materials which is used in the multiple industries. So as we are planning for one inorganic acquisition, where there is a space for manufacturing of some of the basic or industrial chemicals, which is having the huge potential in terms of quantity and revenue, and it is going in the either agro, paint or any other industries where that all the regulatory compliances part and everything is not restricted. So we are having the opportunity, if we can start the industrial and fine chemicals, then it will give us the additional advantage and de-risking our API intermediate portfolio along with that new segment. So that is the whole major plan to entering in the new space. Shruti, our trade receivable are 107. When do we expect to convert them into cash? How many of these receivable over 6 months? Shruti, out of that 107, I guess around 30 CR is more than 6 months, which we have already mentioned in DRHP. There was some issue with one of our distributor which was expired last year in road accident, but we are recovering it and we are confident that within the end of this financial year, everything will be converted in the cash and there will be no more due more than 180 days in our books. Will's current EBITDA margins are sustained in future, but if price correct, what can be the lower end of EBITDA margin rate? Parasji, EBITDA margin, see generally what happen, if you are supplying any of the product in domestic market, it will be highly price sensitive every time. If the government policy will remain the same and most of the APIs is getting imported from China for so many traders in Mumbai, then you will not have any add-on advantage on the EBITDA. But considering the product mix of the domestic and export, we are damn sure on our technology and our operational efficiency that our EBITDA margin will not be less than the 25%. If something will be happen, then we'll have the enough product mix also, so we can try to change the product which will give the better revenue or better EBITDA.
As there are no further questions, we would now like the management to give the closing remarks.
Yeah. Thank you everyone for joining this meeting, and I think you everyone have all this query getting solved from me, and whatever other questions or if somebody wants to meet the personally or visit personally, then you can call to Parth and get my contact detail or email address, and we'll definitely have the good meeting with everyone.
Thank you for joining Anlon Healthcare Limited Q2 and H1 FY26 conference call by Confide Lead Partner. Participants may sign off.